following is a presentation of TFNN.
Let's go to David from Clearwater.
Hey, Steve, thank you for taking my call on this one, and to pass a compliment to you. Taken a lot of classes from Tom since I became a Tiger back in 2009, and they were always phenomenal classes, and last Friday was my first class with you. And just want to say, Steve, fantastic. You were well prepared. The material was excellent. It was timely. It was a really, really, really good class, and you kind of opened my eyes to a few things that have enabled me to use your terminology. Take massive action.
Hey, there you go. I love it.
Live at TFNN, The Trader's Edge, with your host, Steve Rhodes.
And he's picked out a landing spot that is a good 25 feet above the hull.
There's a good chance he doesn't get this inside the Marco's ball.
Well, here it comes. Oh, my goodness. Seen anything like that? This guy's pretty good.
Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the February 14th, terrific Thursday, Valentine's Day edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. And my outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So let's go take a look at one of our tools. This is the tool I call No One's Education is Ever Complete. You know, Albert Einstein once said, a day without learning is a day wasted. And there's so much to learn and so much time and so little time to learn it. Einstein lived by that principle until his very last day. Grandma Moses took up art late in her life. You know, we know the story about Colonel Sanders. He learned about the fast food business and franchising when he was in his 60s. Learning, folks, it is not attained by chance. It must be sought after with diligence. Live and learn, a motto that each of us should live by because, folks, our education is never completed. Learning something new is like a light bulb going off, an experience that I'm sure each of us have had many times, you know, and a light, folks, it cannot be imprisoned. You know, think about it like this. If we took a light bulb and we turned a bowl upside down over it, some of the light would absolutely spill out, right? Even if the light bulb were hermetically sealed. You know, like Johnny Carson used to say back in the days when he would do his Karnak routine. Well, that light bulb, folks, even if it was hermetically sealed, it would heat up the bowl and it would be imparting its warmth out there. Sometimes we try to place a bowl of human belief over the splendor that wants to shine through our light, folks. Any of our frustrations or discouragements in life, maybe that's just simply the light that is escaping from the bowl of our current belief systems. Light, folks, cannot be hidden underneath a bowl, and it is time to let your light shine through. It would only seem apropos in talking about light for me to maybe quote Thomas Edison. He once said, if you're doing anything the way you did 20 years ago, there is a better way. Talk about a better way, folks. Next Wednesday, February 20th, from 6:30 to 7:30 p.m., in the spirit of Thomas Edison, I'll be shining a light on a tool created 20-plus years ago and showing folks a better way to use it. The results are just simply amazing, astounding, and I'll be giving you the strategies that will convert the ordinary, folks, into the extraordinary. No one's education is ever complete. Join me next Wednesday, folks, an evening where you can immerse yourself in an environment that will absolutely harness the momentum that you've got and create breakthrough after breakthrough. Getting into the class is easy. Just sign up for the trial period of Mastering Probability. That's my newsletter service and experience, the bright lights, folks, because no one's education is ever complete. Now let's go take a look at the bright lights of these markets. We got the Dow futures trading off about 50 points right now. The S&P off 4.5, trade out at 15.12.75. NASDAQ futures off about 12, out at 27.58. Russell 2000 down as well. King dollar up 46 ticks right now. We'll certainly take a look at that. The euro, that means the euro is struggling this morning, so we'll take a look at that currency pair. The euro, U.S. dollar, you got the euro down about 116 ticks right now. Gold just kind of hanging out here. Gold up $2 out at 16.47. Silver up 12 pennies out at 30.98. Light sweet crude up 41 cents. Not wanting to back off. Trading out at 97.38 out there across the globe here. The DAX in Germany is off 80 points. The FTSE down 41 out there. So we'll take a look at those and anything else that you would like. All you've got to do is just pick up that phone and give us a call and shine your light on me. This is Valentine's Day Thursday. Happy Valentine's Day to everybody out there in our listening audience. And let's start off by taking a look at the ES Mini. Let's take a look at the 30-minute chart. Maybe some of you were waking early this morning. Early could have been, well, of course we have folks all around the world. But so let's talk about at about 6:30 this morning, you had the markets trading down. So those of you that were bulls, maybe there was a little bit of fear. Maybe you're saying to yourself, hey, is the market top in? And the bears were saying, well, maybe this is the sign of the market top. But let's go see. Let's take a peek in on the 30-minute chart. Let's take a look in on our 30-minute EKG and see what the market was really communicating to us. Number one, if we take a look at the high here, and if you're listening in on the radio or your mobile device at tfnn.mobi, thanks so much for doing that. Remember, you can always catch the archive of this show on Channel 9 as well. You can watch this show streaming live. Just go to the homepage of tfnn.com. Over on the right-hand side, you will see the three little smartphone devices. Click on that, and this show will stream live to you. If we take a look at the 30-minute chart, what we're going to take a look at is the A point here. If an A to B equals CD down, that will be the high that came in yesterday at 10:30. That was at the price point of 15.22 on the ES Mini. That's the futures contract for the S&P 500. That's your A point. The B point is the low that was put in at 3 p.m. yesterday. That low, 15.13. You know, it's almost like clockwork, where at about 3 p.m., Mr. Ken Shreve, if you haven't listened to his show, he's on from 3 to 4. And at about 3 p.m., Ken has this little magic dust that he throws over the marketplace, and it just seems to kind of move the market up. Well, that created the C point of an A to B equals CD down. It created the B point, I should say. That was a low coming in at 3 p.m. yesterday. And the C point probably about last night, right around 9:30 or so, right in that 15.18.25 level. That was your C. A to B equals CD would have taken the ES Mini on the 30-minute chart down to 15.09 and a quarter. What did it actually do coming into 6:30? It got to 15.10. Now, if you're watching us on Tiger TV, you see the little black line going across my chart there. I'm going to go ahead and actually smush. I don't know that smush is a word, but that's what I'm going to do to this chart out here. Squeeze probably is a better word. So I'm going to squeeze the chart a bit, and you can now see the top and bottom of that black line. That was a horizontal consolidation area that the ES Mini had been traveling in for quite a period of time, really from February the 1st through about the 8th of February out there, and that set up an area of both support and resistance, support being at the bottom, resistance being at the top. But once you break through a resistance area, old resistance becomes what? Old resistance becomes new support. We can see that area here was tested coming into about the 12:30 session on February the 12th, a couple days ago. That level held. Then you can see here this morning that at really at that price point. And you got to be able to move this black line up or down just a tad here. But what you can see, as the ES Mini was in essence completing an A to B equals CD down, it was also running right into that old area of resistance, now has become an area of support. And this is a line of demarcation that everybody is going to want to be paying attention to. Why? Well, how about on the 30-minute chart? Not only is it a support level, but what it created one of our hammer candles out there, so we know where the bulls are hanging out. The market also at that stage getting into that oversold territory. So we know where the bulls are. We also know that the market has had to work off this oversold condition out here. That makes this line, and that line being, and we're going to call now the low of the hammer candle on that 30-minute chart, and that is 15.10 on the ES Mini. If you're long, you're wrong when you get a move below that. So now where is it that price could move down to? Well, what would your expectation be? I would say if we just simply come back here, there'd be a couple of them, but I would just simply start off with the low of the bottom of that consolidation run. That would take us back into about, 16:30, about 4:30 in the afternoon on February 4th. If we just simply go from that low all the way up to the high out here, what you're also going to see at 15:09.75. Remember, the ES Mini this morning got down to 15:10, so we're okay to round things up by a quarter here. That, folks, was the .382 retracement. You break through the .382 retracement, you break through that hammer. What is that going to set up? That's going to set up a move down to the 1502 level, Suite 618. That's what you're going to do when you're in Clearwater. You're going to come visit us, and you'll see that you'll be visiting us at Suite 618. That is on the ES Mini. That is on the 30-minute chart. That is why the markets were doing what they were doing this morning. So if you got up, you saw the markets were, as one might say, maybe croaking a bit here. What you want to do is you want to come, and I say just use the 30-minute chart. It is as good as anything. The 10-minute chart has a little bit too much noise in it. Just simply go take a look at that 30-minute chart and use some of these tools. Maybe there's some light bulbs going off out there in our listening audience, and these are, our education is never done. It is never done, and that is the beauty of it. We are always trying to discover something new out here. So we know where the line is drawn in the sand on the ES Mini. Let's go take a look at the daily chart of the ES. Let's take a look at the larger term picture out here. Well, that's the NQ we've got, but let's go ahead and put the ES Mini up on the screen. What we do know about the ES Mini is that is what has been leading the market up here. It has been strong as it has moved over the February 1st high out here, which was about 15.10.50, trading at 15.12 and a quarter right now. So it's really from the ES Mini, from the S&P today, from the S&P futures, where we will get our signals, either bullish or bearish out there. This is what you're going to, because this has been the strength, right? So from strength, you get information. What happens today on the ES Mini? Well, the ES Mini, it becomes pretty simple. You close below 15.12.50, and it's at 15.12 and a quarter right now. Quite frankly, it sets up a bearish reversal signal. It's called the blended candle out there. It's something also that I will be sharing at the course next Wednesday, because it's going to be one of those tools that you're going to want to have in your arsenal in being able to practice and use what it is that I'm going to teach you folks. And this is going to be a lesson that nobody should miss out on this one. This is a beauty out there. If we take a look at the ES Mini and we take a look at the possibility of a market top having formed here, let's go take a look at where this will likely travel to. And that's just simply going from the low swing point of November 16th up to the high that was put in yesterday. At a minimum, you'll see a dead cat bounce. That would take it down to 14.52.50. Will it be a straight line move down? Absolutely not. It never is. Never will be. But 14.52.57, well, 14.52.50, that is a very doable number. That takes you into that January 2nd level. 877-927-6648. Valentine's Day edition of the Trader's Edge. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by Backtech Environmental. For more information, just click the Backtech banner on the front page of TFNN.com.
Welcome back, folks. Popping in the market here. You got the red sauce out there. Ketchup, Heinz Company, H.J. Heinz. That is popping nicely based on the, you got Berkshire Hathaway and 3G Capital buying them out, $28 billion deal out there. So that is popping in the market. You got Constellation Beverages, STZ is the ticker symbol. They closed at $31.88, trading up $41 out there, working on their deals with Anheuser-Busch. I guess they revised their deal. So you got both STZ and Bud. This Bud's for you, popping as well, trading out at $92.70 right now. You've got Angie's List, ANGI. I don't know that I've looked at that stock chart in like forever, so we'll take a look at it today. That is trading up at $17.40, closed at $13.62 out there. BHP Billiton, that closed at $78.53. That is trading out right now at $79.71. Oh, boy, going to the salon. You've got Ulta Salon. They closed at $99. They're down $10. Let's take a look and see what their guidance or release of see if they have the numbers out. I don't see the numbers. It says their Q4 sales were up 30% to $757 million, but their guidance must be, all they've done is reaffirm their Q4 guidance. They're getting hammered this morning here. Weight Watchers losing some weight as well. Their ticker symbol, WTW. They close at $54.11. They're down at $44.95. CenturyLink CTL is their ticker symbol, trading out at 33.92. They're down. They close at 41.69. Whole Foods, Whole Paychecks market out there, WFM, they closed at 96.90, trading out at $90 right now. TripAdvisors as well. I believe they were, not out with earnings, but they closed at, hold on, maybe they did. Yeah, they did come out with earnings. Closed at 46.90, trading at 42.86 out there. And 870. Well, how about let's take a look at Apple here, because today could be all about Apple. They closed at 467, trading down right now at 460, 450. 877-927-6648. Let's go take a look at the euro out here. We've got the 30-minute chart for the euro US dollar. Now, one of the things that you're going to take a look at on my screen, you might see these little yellow boxes. This is called the harmony in the markets of the retracements that are going on in the euro on its move down. The first retracement coming from the time period, again, we're looking at a 30-minute chart at 11 a.m. yesterday, as the euro made a low, made a little bit of a bounce coming into the, did bounce for about a couple hours up into the 1 p.m. time frame. That's that little yellow box here. What we can see as the euro then started moving down with some conviction this morning about 2:30. Remember, you've got 2 o'clock in the morning. That's when you've got London in the currency market really coming online. So paying attention to what's going on between 2 and 3 in the morning is very important to do. And we can see here as the euro moves down into the 3 a.m. time frame, take a look at that first retracement. I've got the boxes off to the left so you can see what's going on the right-hand side, but you can see the low coming in here in the euro at 2:30, 3 o'clock in the morning. Actually, the low was 1.33814 during that trading session. Bounces up for a period of an hour into the 4:30 a.m. time frame, gets up to a high of 134.129. If we come down and take a look at what was going on this morning, as our markets were also at 6:30 a.m. making a low. The euro was doing the same thing, so we can see the direct correlation between the queen and our markets out here. The euro going ahead and for a period of an hour going ahead and working off some of that oversold condition, making another retracement and doing it. You can see the harmony, just the beautiful harmony in the markets out here. If we now go take a look at the daily chart of the euro, one of the things that we are going to see, number one, it is underneath its most recent swing point, which was February 8th out there. That is setting up an A to B equals CD down. We're also showing this rising price channel that the euro has been traveling within. Of course, if you're looking at the pattern that is on my chart here, you're looking at a 0.786 Gartley pattern out at about the 131.607. So the euro, the first area, the first test is going to be the bottom of that rising price channel. But if I go ahead and erase this pattern here, because we can always draw that back, what we can see about the euro is it should find some pretty decent horizontal resistance right here at the trading session of January 10th. The low of that area, or we're going to call it the low of the entire cluster, we'll go back to the January 4th low, 1.29963, should act as a pretty good support level. You got some bullish candles, you got wide price spread, you had some conviction there. So we'll see if the euro can hold this rising price channel. One of the things, if we take a look at this, I'll go ahead and blow it up on my screen. If we take a look at just simply an A to B equals CD pattern on this, you'll see that the 1-to-1 takes you below that level. So below that level, meaning the bottom of the rising price channel out the 131.617. So I suspect what we'll see is we'll see a spike lower. You can see here from a euro standpoint, not really in the not anywhere near the oversold condition. So the euro on a daily chart has much more room to run to the downside. What's that going to set up? That's setting up the correction that is underway in the marketplace. 877-927-6648. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization execution capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow off 54 points, composite down 12, 13, S&P's off 6, small caps off 1.5, Google off $3, Apple down 75 cents right now, Microsoft down 10 ticks, Intel off 8, Cisco down 46 pennies out there, leading the charge to the upside. Heinz up $12 dollar-wise. They're up a nice 19%. Constellation Energy or Beverage, STZ up 28%. Zillow up 18% this morning, up $7 and change. Anheuser-Busch up about 5. United Therapeutics up 2 and change. Angie's List up 25%. That's up $3.40. Ulta Salon down about 11% now. That's $11 off of its close from yesterday. Weight Watchers down $10. That's off 18%. Whole Foods down 9%. CenturyLink off 19% this morning. Pioneer Natural Resources, PXD out there, down about $6 right now. Let's go to Jack in Safety Harbor. Jack, thanks for calling. Thanks for holding. How are you? Uh-oh. we have Jack out there?
Can you hear me?
There you go. There you go, Jack. You wanted to take a look at Berkshire Hathaway, I believe, right?
Yeah, I own some Heinz, and I see where they've. It looks like they're going to be purchasing Heinz, and I thought I might take a position on BRK, and I was looking for an entry point, Steve.
So let me see here. I was struggling here too. I just realized BRK.B. Why am I struggling to pull that up here on my chart? Let me try that again out here. BRK.B. Oh, it's going to the tick thing here. Give me one more shot there. BRKB. Let me try that. That's not going to do it either. You know what I'm going to have to do? Geez, and I apologize for this, Jack. What I'll do during a break is for me to be able to pull up the B shares. There's something I've got to do here. I can't remember how I pull it up on my symbol. On my chart here. But what I will do is I'll find a way to do that, and then during the next break or what have you. Do you listen in for the entire hour?
I do. Yeah. I'll be listening in, Steve, and so I thank you for doing that. And
yeah, no problem. I pulled it up in the past. I just have a little brain contusion going on here, and I can't. I'll find a way to do that.
Not a problem, and wish you lots of luck on the greens. Keep it on the short grass.
All right. Thanks, my friend.
All right.
We've got the Dow off 48 points. Let's go take a look at some of these stocks here that are moving. You got Angie's List. Let's start off with Angie's List. That is gapping up nicely this morning. Has some pretty decent volume behind it as well. 1 million shares out there. That is going to make a run for its highs. The highs out here were made with about 381,000 shares. That's up at about the 1982 level. Let's go ahead and pull this stock chart back here. But you can see it is in the extreme overbought condition. So you'd want to take a look at this maybe on a buyback as testing out the gap out there. But let's take a look at this on a little bit longer term chart. Okay, it is an IPO that came out back in the November 2011 time frame. So, we'll see as it goes up here and it makes the high. Looks like it could be running into a natural area of resistance, which is the highs of March 30th out at about that 1982 level out there. Let's go back now to the daily chart. Let's take a look at the I don't know, A to B equals CD point out here. I don't know that you could really come up with a very good A to B equals C. This thing was just kind of moving sideways to higher over the course of the last several months since that November of 2012 time frame out here. No real clues of seeing today's nice gap. It gave you a opportunity to come in on this equity here. I see this little hammer candle back here on September the 6th, 2012. So that gave a nice little support area. And what you can see the stock did here, there was 400,000 shares at that hammer candle. As the stock was moving down, it was moving down with some pretty decent volume in October of 2012. October 23rd, 756 million shares, 756,000 shares out there. The next trading session, 728. But what you can see is that hammer really acted as a very good support area. And one of the cool things about hammers, and you want to be able to learn how to identify them, you want to make sure that you can identify the lows of those because they become fairly easy to trade because you can live by that rule if you get a close below a hammer candle, if you're long, you're wrong. I mean, you can just simply use that rule. So you can have a wide price stop as you get into the trade, and then you can, that way it allows you to see what happens intraday. But in equity, even like this, you know where your support is at. You know if that support is broken, it means you don't really know where price is going to go, but it would give you the opportunity to go ahead and get into a trade. So you had that hammer candle back there. It was tested back in that October time frame, about the 23rd, the 24th out here, and then you get a sign of strength off of the bottom. So that is pretty nice out there. The sign of strength was 4.1 million shares. Now, as it came back into the gap, it never actually closed the gap. It never tested the high of October 24th out there, and maybe it never does go ahead and close that gap. But what the equity was doing was it was pulling back with some nice volume out, with light volume, I should say, 434,000 shares, and that was going into, in essence, that 728,000 shares where it broke out from. Now, never testing a gap, the question should be, well, how do you identify? How do you identify where it is that you would go ahead and buy? Well, you got to take a look at what the bulls and bears are telling you and go ahead and pick your spot. Well, you had a nice bullish candle out here actually on November the 12th. and you had a little bit of follow through on the following session out here. So you had this little cluster of candles as it was coming back into this area. All you'd have to do is just make sure that you had a wide enough stop. If you were interested in this equity, just simply showing you the message of the markets and how to be able to read these candles as you're coming back into normal areas of support or resistance out there. So that is on Angie's list. Let's go take a look at Alta Salon. Alta Salon, the leader in the clubhouse. To the downside, off about 11.5% right now, gapping down with some volume. So it's got some institutional selling in here. Let's go clean up this chart and see what this is doing. This has had some gaps up. This has had some it's had several gaps up. Let's see this here. So we take a look at Alta Salon, where this should find some decent support here. Let's see. It's trading into the swing point. Its most recent swing point is the November. Well, of course, it would make sense that it's November. One at a time, you've got stocks going back to the November 16th area. In this case here, in Alta Salon, it's that bullish engulfing candle on November the 13th out there. The low is 86.26. The high, 89.65. That should, let's see, volume-wise, though, down at the swing point, only 982,000 shares this morning being taken to the woodshed, 971,000 shares in the first 11 minutes of trading. That really sets up by trying to come back down to the low here. Got a red line going across my screen here on Alta Salon. And that low out here, that swing point, which has not been tested, that's got some decent volume, 2.5 million shares out there. I suspect that is where Alta Salon wants to move to. And then this could be just simply setting up a little sideways consolidation range out here. That consolidation range could be from those lows of about $78, $79 and change all the way up to $102. So that would not be a bad play. But you'd have to really watch this and watch the volume as it comes down into that candle. It's not a hammer candle, so it is not. It's actually referred to as a high wave candle out there. So that is not a candle that will act as it's not like that hammer candles, or the hammer candle that we were looking at on Angie's list out here. So instead, you'd be taking a look at that as a test of a swing point, and you'd like to see that test on lighter volume, and you'd like to see some type of bullish candle configuration in order to give you that consolidation zone that it looks like Alta Salon wants to go ahead and trade into. Let's go take a look at Weight Watchers. WTW is the ticker symbol out there. That is off about 19% here this morning. So Weight Watchers is having a diet in its stock, not exactly what you'd want to be seeing, and taking on a gap down swing point that goes back to August 2nd, 2012. That had 3.1 million shares. The high is 45.50, so you're trading inside that level right now, trading out at 44.05. The low, 40.60. So if we take a look at, again, that's 3 million shares. So far this morning, it's already done 1.1 million shares. So it is going to go down and test that level. Eeks. Look at this thing. This thing had quite a breakout. So that is really where it's trading into. So this is interesting. Take a look at, let's actually put this on a weekly chart, see what the weekly chart of Weight Watchers looks like. Okay, so we can see the breakout here on the week. I don't want to delete it. I wanted to refresh it here. We can see where the breakout occurred on a weekly basis. We can see that also has been a level that was tested and is held as resistance. We'll go ahead and draw a black line across the screen here. Where I'm referring to, folks, is this is why. Here is the textbook definition of wide price spread accelerated volume. So we're going and taking a look at the week of February 18th, 2011. Does 16 million shares during that week. But look at that bar. That there, if we were to go ahead and take a look at candlesticks and take a look at the power of a candlestick on a scale of 1 to 10, that one there qualifies as a type 2, really. Out there. Type 1 would have closed right at its session highs, closed just a little bit off of that, but that is extremely powerful. 16 million shares again on that week. The only time it's been tested, that breakout area, was the week of August 3rd, 2012. Came back with half of the volume, 7 million shares out there. So it'll be interesting to watch this stock chart here and see if this area holds, see if those bulls can keep a price in this level. I would suspect we'll see the price dip down and test the 40.60 level. That's the low of the week of August 3rd. And then perhaps if those bulls are around, we'll close back above the breakout candle. Now, I say I would likely close above the 43.41 out there. Not suggesting that you go out and take a trade in this, but that is what the weekly chart looks like on Weight Watchers. Let's go take a look at Zillow. Zillow up 14% this morning here. Then we'll go peek in on the commodities, see what the commodities are doing out in the marketplace. I forget my system here doesn't like that. Give me a second to got to pull this one up a little bit different. Oh, that's how I pull up Berkshire Hathaway as well. Now I just remembered. Okay, Jack, there we go. I knew there was a trick in my system to pull up Berkshire Hathaway, and there we go. So now we've got Berkshire Hathaway up for Jack in Safety Harbor, who was looking at it, and he was looking for a possible entry point on this. So as we take a look at Berkshire Hathaway, it is trading at 98.19. Let's see where this thing is in the relative strength and weakness. So it had gotten up into a extreme level back here on January the 24th. As it got, let me put the numbers on the screen here so we can see where it hit on that date on that RSI. About 77.48, made a higher high on February the 1st out there as the market as well was moving higher, doing it with less relative strength, not necessarily a good sign out there. It looks to me, Jack, like what Berkshire Hathaway should do here, should go back up and test that February 1st high. It's got 4.3 million shares. The high out there is $99 even Steven. Ooh, that's an interesting thing. That is one of Basil's round number highs. I don't know what that means from the standpoint of Basil goes ahead and puts it together with all of his Chapman Wave tools out there, but it is a round number high. What I would say, Jack, is let it go up there and test that level and then come ahead and pull back. If it tests that on later volume, you should start to see a pullback. Your ideal place to take a look at a entry position in this is right around the gap back on January 2nd out there. The high of that gap is 93.20. The low out there is 91.29. If it gets inside that bar and it's coming back with more than 7.5 million shares, it says that it want to go down and at least test the bottom of where it gapped up January 2nd, 91.32. And if it gets below that, then you would see it close the gap from December 31st. And that would be your ideal buy on this equity here. Just pay attention to the relative weakness as this equity would go ahead and pull back. You'd like to be buying it when you're down below the midpoint, down below that 50% level out there, and that is on Berkshire Hathaway. It's had a nice run. It's also making a 100% move of a move that takes you all the way back, or takes it all the way back into 2007. So what we can say here about Berkshire Hathaway working in concert with the market as well, the S&P 500, going the S&P 500 not too far away from the 2007 highs. The same thing with the Dow. So you got Berkshire Hathaway. So I would say you'd also be taking like a trading this in conjunction with the market out there. So if Berkshire Hathaway holds up better than the market, assume that there's a retracement, a pullback, and you get a reversal signal as an additional move higher in the markets, come back and take a look at Berkshire Hathaway. Maybe that's a spot where you would look to be able to add to it. So just got to remember, that is how I always get into either Berkshire Hathaway or, for right now, Zillow for that matter. So let's come down now and take a look at Zillow. You got to love how the universe works. It just gave me the opportunity out there to remember how it was I did that, because during the break I was struggling to say, well, what is it that I didn't do that I should be doing? So now we're going to take a look at the Zillow. Sorry for the blabbering there, but every now and then. Gapping up here this morning, has some nice volume in it. Of course, what Zillow has, which is kind of nasty out here, it's got this high volume gap down here, which is on November the 6th, 7.4 million shares to the downside. Right now, Zillow running into a supply line, which was a gap down from September 25th out there. So right now, Zillow is has made a 100% move of a move that was it wasn't really at its all-time highs. How about this? Is this really? Let me refresh my screen. How about this? So Zillow here looks like folks on their IPO day, unless I've got a bad tick, actually opened at $60 and traded all the way down to $32.50. That's nasty. That is very nasty out there. But let's forget that opening day candle out here. If we take a look at Zillow, let's go take a look, and we'll draw the line across the chart here. The swing point high, volume-wise, that swing point does not have much in the way of volume out here. So if it does not get above it, maybe Zillow goes ahead and pulls back to the bottom of today's gap. Maybe it actually comes down. This is the second gap up on the way up out here. The first gap began on February 13th. Somebody knew something, and then you've got the one from this morning. 877-927-6648. We'll be right back, folks.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow down 14 points right now. Composite off 8. S&P's off 2. Russell 2000 nearly flat. And we're going to go back to the ES Mini 30-minute chart here just for a moment. Then we'll go peek in on the commodities out there, gold and silver. We can see the bullish line here being defended. So you got it's very clear where the bulls are hanging out this morning. It's at that low of the hammer candle. You had a nice bullish engulfing that is being created here, assuming that the close, is above the level of 15.13, and it's at 15.15 and a quarter right now. So you've got this little hammer candle that we were taking a look at coming in at 6:30. So we know that was coming in to a support area. Very important to be watching that, bullish or bearish, to understand what the message of the markets are. And again, moving down into the oversold condition. So it all makes sense now as the market was pushing down into the open, into the 9:30 session out here. During this 9:30 to 10 o'clock session, you can see the market pushed down into the body of that hammer candle. Actually got down to almost about the midpoint of the wick, not quite down there. And what you can see forming right now is a bullish engulfing. But in order for it to remain a bullish engulfing candle here, it'll need to close above the prior session open, and that was at 15.13 out here. So very clearly the area where the bulls are hanging out. That's very important to understand, because if that area cracks, that sends an important message out to the marketplace. So that is on the ES Mini 30-minute chart and the update there. Let's go take a look at gold, see what Goldilocks is doing this morning. Trading out at $16.46. It is up $1.40 right now, so not really doing much. We can see here that you've got the 0.786 Gartley buy pattern that is in jeopardy, because what you really don't have is you do not have any bullish candles. Just because you see a green body does not mean that it is a bullish candle or a reversal signal out there. So gold here hanging out at these lows, as it should. It's also inside the body, or the midpoint, or beyond the midpoint, actually, of its hammer candle, which is that January 4th low candle. The low there is 16.26. And what's so important about that hammer session is that typically, folks, when a 0.786 Gartley fails, it turns into a butterfly. And what I mean by a butterfly, all we have to do is take a look at the expansion of our X to A point here, just to see what that pattern would turn into. 1.272 takes you to 1607. However, 1.618 expansion would take you back to 1583. 1583 is where gold will travel to if it breaks that hammer low out there. I can draw the pattern in here. Why? We'll go to the extension on this smaller pattern, because hanging out at 1584 is the 0.786 retracement. And you just simply have, two patterns converging in one area, and that's generally where you would see price go ahead and move to. That pattern would go from that Gartley buy right here into this butterfly pattern out there. And that is what she would look like, a 1.6 expansion of that level. If we take a peek in on silver here, silver is holding up better than gold for sure. You can see the bullish line out here happens to be the swing point low of January 28th. That low is $30.74 out there. You then had a bullish engulfing that came into play on the following session, January 29th. That level so far holding as a support area. But if we take a look at the last three trading sessions out here, no bullish. That is not a hammer candle on February the 12th out there. Looks like one, but it is not one. And so no bullish candles here. This is the line where where silver is being defended, $30.74. Silver trading at $30.88. Close below that level, and it'll go all the way back down to the swing point low, most likely to the lows of January 4th. Well, folks, our time has ended for the day, but you can stay tuned for the next hour for the Money Master Show. If you're off to start your day, have a fantastic Valentine's Day. Happy Valentine's Day to all of you out there. Be safe, and I look forward to talking. Take care, folks.